Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. The Reserve Bank's preferred measure of inflation is back in the target range for the first time in more than 3 years. Quarterly CPI came in slightly higher than forecast, but it probably wasn't high enough to prevent a rate cut when the Reserve Bank board meets later this month. Cherelle Murphy is the chief economist at EY, a former Reserve banker herself. Welcome back to Fear and Greed, Cherelle.
Thank you, Sean. It's a delight to be here.
What did you make of yesterday's figures?
Look, they're pretty good, aren't they? When we think about it, we've got annual inflation back down to 2.4%. And just 2 years ago, it was at 7%. So that's pretty phenomenal. I was actually at the Prime Minister's press club address yesterday and noticed that not one question about inflation from all those journalists in the room, which I think in itself...
Was that after the release of the data?
It was 1 hour after the release. So very, very fresh news and not brought up at all.
Wow.
So I think that says a lot.
It says a hell of a lot, doesn't it? It's funny, we're digressing already here, but the economy hasn't really been front and centre in this campaign. Cost of living has, definitely, and, around the edges, but we haven't been talking economic growth. We haven't been talking inflation. We haven't really been talking unemployment.
No, and neither we've been talking about fiscal discipline, unfortunately, either. So you're right. I think other matters have dominated. I mean, you might argue that we've been talking about tariffs a lot, and that is the economy, and the potential risks from that. But I'd say that the economy is actually running reasonably well at the moment. You've got unemployment down just above 4%. You've got the inflation rate down as well. So that's, I guess, left room for the Prime Minister to be grilled on the many other topics that he can be grilled on.
Perhaps. So back to the figures yesterday. So what were they? Why are we worried about the underlying inflation figure so much? You kind of wasn't mean for interest rates.
So the headline number, as you say, down at 2.4%, so nice and safely within the Reserve Bank's target band of 2 to 3%. That's been the case for a little while. But the real news, I guess, was in that trimmed mean number, which was sitting at 2.9%. So that's the first time that it's been in that 2 to 3% target band for some time. And that in itself is, I guess, the best news in these data, because when we take out those volatile items, so the things that right at the sort of top end and the low end of the price changes, we can see that core inflation is running at a much more acceptable pace. That, of course, was not unexpected. The market had priced, in fact, the market had priced for something a little higher than that, but it was a good number, and it was enough to kind of lock in, I think, the Reserve Bank's May rate cut. The markets had already expected that before the release, but of course the release could have thrown that off course, and it didn't yesterday.
Should we stop worrying about inflation then? Or were the things yesterday that make you think there are still things that they need to get control of?
Look, when we look a little closer at the quarterly profile of the numbers, you can see that both on the headline number and the underlying number that the pace of inflation actually did jump up a little bit. So even although the annual numbers were down, the quarterly numbers weren't quite so good. Now, that's not in itself an indication that we're about to sort of see another bout of inflation or things take off, but it's not ideal in the sense that you'd like to see those quarterly numbers either stable or falling and not rising. But so that's worth keeping an eye on. As always, there are some numbers in there which are not particularly great. So health and education, for example, those were still rising at probably uncomfortably high numbers. Now, health up 2.9%, education costs up 5.2% in the year to the March quarter. A little bit of seasonality in that for education, of course, given it's the start of the year. But I think overall good news, a couple of things to keep an eye on, and the Reserve Bank, of course, will be dissecting these numbers every which way it can to make sure that they're not missing anything or any trends. But I think overall they'd be fairly comfortable. Probably another thing I'd add here is that, of course, inflation and the cost of living are sort of different things. Inflation can come down, but your cost of living can still be high. So in other words, if you've had a bout of inflation and very serious inflation like we've had over the last 2 to 3 years, you kind of get an elevation in the price level, which means that households feel like things are expensive, and they are,
Yeah.
certainly compared to, say, 2019 before COVID. And a lower inflation rate, of course, doesn't make that better. It just means that they're not rising at the same pace that they were. So I'd say that cost of living issue is still an issue, and certainly something that the politicians in particular are very focused on, which is, of course, why we've seen a number of election policies which have been aimed to try and address that.
Stay with me, Cherelle. I want to talk about how this all plays out in politics, but also broadly in the economy. We'll be back in a minute. My guest this morning is EY Chief Economist Cherelle Murphy. Before the break, you were talking effectively about the cost of living, and I think I saw some figures yesterday. Prices are up 20% over the last 5 years, but wages are up 15%. It's got to be in a nutshell. That's where you see the cost of living crunch, and the fact that it's great to have inflation lower, but it's not like prices are falling. We don't want that. We're still paying elevated prices given what's happened in the last few years. How does that play out in the election? We're apolitical, so I'm not interested in any, my view, your view on who should win. But it does seem that the government has a bit of a leg up on this issue.
Yeah, it's certainly. I'd say both parties are very sensitive to it, though, because the policies that are, you almost say they're kind of core policies are focused on this. So the electricity rebates coming through again in the budget, the tax cuts in the budget from the government, and then the coalition choosing to lower the excise on petrol. These are, of course, aimed front and center at cost of living issues. And it doesn't matter what poll or survey you look at, to voters, cost of living is the number one problem for them. On average, it's very, very high. So it has been directing political attention. And to some extent, that's unfortunate, because when we're getting kind of sugar hits, if you like, to try and manage this problem, and things like the electricity rebate and the cut to the fuel excise really are that. They're not fixing any long-term problem. They're not structurally improving the budget deficit. Then we're kind of worse off for it in the end. And it also diverts attention from, or political appetite, I guess, for getting on with some of the bigger picture problems and structural reforms that we'd like to see. So it's there. It's a problem. It's being dealt with in the election. But I think in the long term, it's holding us back. It's something that actually kind of almost gets in the way.
This time next week, we'll have a Prime Minister Albanese or a Prime Minister Dutton. How important, or how much will they have to worry about what's going on in the US and the tariff trade war, given that they've got 3 years really to roll out their agenda and hopefully get some fiscal discipline back into the place? The tariffs, how do they play those?
I think it's one of those difficult issues because, A, it's hard to actually interpret how it falls or flows through into the Australian economy. And the Reserve Bank governor put this fairly neatly just recently. We said, well, it could cause growth to go down, but maybe there'll be some upside to exports if we are more competitive in some areas, and it could cause inflation to go up, but also could cause inflation to go down. So it's a really hard one. I think if I was sitting in government at the moment, I'd be most concerned about what it may do to domestic investment and domestic consumption. And in the sense that the uncertainty, the sort of on and off nature of these tariffs and the sort of chaos that seems to be coming out of the US at the moment is potentially something that will cause Australian businesses and to some extent consumers to think twice about making big investments or big consumption decisions. So that kind of investment pause is something that will be meaningful for our GDP. And so again, from a political point of view, you don't want to see the economy kind of stutter to a halt as we wait to see what goes on here, because that will have implications, including for employment and, of course, just the speed at which the economy is running and the health of the economy.
I wanted you to come on to talk about interest rates. We've gone everywhere around the world on this. Wrapping it up. So you expect an interest rate cut in 3 weeks when the Reserve Bank meets. What about later in the year? Is it a one-off cut? Will there be others?
I think there'll be others. We've got monetary policy in an contractionary mode at the moment, in the sense that it is actually causing the economy to probably slow down a little bit more relative to a neutral stance. So in other words, interest rates have to come down a little further to get to neutral. And I think that's more than one 25 basis point cut. So I think the Reserve Bank will be wanting to move back to neutral with these relatively good inflation numbers and the new risk that the economy slows down because of tariffs, geopolitical strife, and concerns from business about what's coming. So in other words, the economy has not only lost that inflationary pressure and the heat that's been in the economy, but it's also looking at some new downside risks. And if I was sitting in the Reserve Bank, I think I'd see it as quite prudent to now put in just that little bit of, insurance that the economy can continue to run at a reasonable pace over the next couple of years.
Cherelle, thank you for talking to Fear and Greed.
My pleasure. Thank you.
That was EY Chief Economist Cherelle Murphy. This is the Fear and Greed Business Interview. Join us every morning for the full episode of Fear and Greed, daily business news for people who make their own decisions. I'm Sean Aylmer. Enjoy your day.